Good day, everyone. Ali Safi here from Safi Financial Network. In this video, I'm going to talk about gold and gold price and the future of the gold price for the next few months. If you just follow us in our YouTube channel, I just mentioned many times since last 5 months that gold is about to break out to a new all-time high. And sure enough, we had this last 2 weeks, especially on at the beginning of the March, gold is going to the upside parabolically and hit a 2200 or 2200 area. So what's the catalyst behind that, and why gold is just spiking to the upside, and while it was like a consolidating for multi months, kind of like a choppy consolidation since 2020. Um, for this is a monthly chart for gold. And if you just look at this, we had this pattern before. So this is kind of like a nice reverse head and shoulder. And this is 2008 to 2009. So this is 2008 to 2009. And we had a breakout. We didn't have a back test to this neckline. It goes parabolically to the upside. So I believe we are at the same stage. So I'm not sure if we are going to see the same parabolic move to the upside even higher. But I believe that 2,500 is coming for gold this year. So this is going to be very, very foreseeable scenario. This is the minimum foreseeable scenario for gold, I should say. We can have like a certain levels down here, like a 2250, 2400, and then 2500. But I should say gold is just spiking for a new all-time high, and potential scenario is going to be higher than the current level. However, we are due for a corrective move for a daily chart, but based on the monthly chart, we can see we are at the same scenario like 2008 to 2009. Some people are saying, why 2008, 2009? Why we are not at, for example, 2012 or 11 to 2012? So the reason is this chart. So this is a gold chart. And let me just zoom back here to, for example, monthly chart. All right, so this is a monthly chart of gold. Obviously, we had a new all-time high here, and this is a 2008 to 2009, and this is 2011, 2012, right? So I believe that gold is having the same pattern like 2008 to 2009. First of all, the price action. It's absolutely a reverse head and shoulder, neckline broken to the upside. We are seeing nice reverse head and shoulder, neckline broken to the upside. So this is exactly the same pattern that we see in both period. Another reason that I'm just mentioning, we are very, very similar fundamentally to 2008 to 2009 is this chart. Let me just bring this chart. And this is US 2 years bond yield. If we just put this chart here, you see that yield is going higher and higher prior to 2008. And this brings interest rate to the higher high, higher high. And it goes almost to 5 to 5.20%. Where are we at now? So we are at the same level at 2008, 2009. And if we just look at this, yield just peaked before gold price higher high. And this is the same pattern, peaked before gold price higher high. And now yield is just reverting to the backside. So yield is giving us kind of like a lower high in this period. And you will see that when it dramatically goes down, gold price goes higher afterwards. So we are kind of like at the same scenario. We're seeing yield is heading down, and potentially we see some kind of like a lower high as well for a dramatic sell-off in yield. So this means rate is going to go down. I don't care what Federal Reserve is telling us, but based on this chart, I should say Fed fund rate had the same scenario. So this is 2008, 2009, and Fed fund rate was paused or flat for almost a year. Right now, we are at the same stage. We are flat for a year or so. So if it goes down, or if when Federal Reserve pivot, I don't know if they're going to pivot June, July, August, whatever, but they will. Eventually, they will. In summertime, they will, if not sooner. So this yield can go to the lower low and can just going downside, which gold will be beneficiary of this environment, and it can go higher, high. And for the next 2-3 years, I should say, gold is getting back to a nice bullish momentum to the upside. And I should say, at least for this year, we can expect prices going back to 2,500 or so. So this chart tells me that we are at the same scenario like 2008, 2009, not 2011, 2012. So that is very, very strong fundamental reason behind my analysis. If we go to weekly chart for the first time, gold close a weekly candle without long shadow. So previous time we had this long shadow here, long shadow here, long shadow, and also this one. The previous one just in December, long shadow goes to this multi-weeks consolidation. But this week, we just got a very, very nice surge to the upside, close at 2179, weekly candle, weekly close, weekly new all-time high. So this is a fantastic bullish scenario for gold. Yes, fast line goes to over kind of like a bad condition. Slow line is not there yet. So if we want to be fair to gold, we can see some kind of like a pullback, probably 2-3 days corrective move to here to 2129, and that would be the level for a next surge to the upside. If you go to daily chart, you will see the same pattern here. So daily chart, very nice parabolic move to the upside. I just told you if we get above 2048, we can see a parabolic move to the upside. Fair enough. We had this very, very fast and quick rebound to the upside, nicely like a rebound band, and it goes parabolically to the upside. Hit 2200, coming down. So this shadow tells me probably the potential pullback is coming to 2120, which is going to be this flag limit here in 4 hours chart. So after that, we can see another surge to the upside. April, May could be kind of like a choppy, or I should say June, July, even August could be kind of like a good potential scenario for gold to hit very, very higher price than this. So 2,500, I should say, is going to be a foreseeable scenario by this summertime. And after August, we will get back to another potential analysis for a bigger corrective move to the downside. However, still, I'm kind of like a bullish in gold, and all corrections for the next few months, for the next few years, could be a great buying opportunity for higher pricing gold. If you like this video, please smash the like button, subscribe to our channel, and have a good one. See you on the chart. Bye-bye.